Hey, Jonathan here, and today instead of highlighting a neighborhood or local restaurant or something like that, I want to talk about the market a little bit. And I'm not going to pull data and regurgitate that, but talk about a little bit of what we talk about on a daily basis or see our buyers doing being in our local market all day, every day. So, um, first of all, there is a lot of uncertainty in the market, of course. There was a lot of uncertainty in the market in 2020 when I purchased, and I thought I was buying at the top, and a lot of people did. And fast forward now, they've got a lot of equity in the place and could sell it for almost double, which is almost double the rate that it would have cost in 2010 or I mean, real estate goes up as time goes on. Even though we do have, dips in real estate cyclical, um, time in the market's not always possible. And people have been calling for a crash since 2020 or so. And of course, now we're rolling into 2024. Did you call it when you've been saying it for 4 years? But yeah, there's a lot of uncertainty in the market, but um, and it could always adjust. I don't see the adjustment coming from people throwing the keys back to the bank like 2008 so much because there is so much equity in it. There's a lot of people out there who bought 2020, 2021, or before. It's only a narrow window that property's been trading where they've been trading. But if that's the case, if you bought, let's take an example area, phase four of watercolor, 2020, those houses were mid 900s and now they're 2 million, so million then in 2020, 500 in 2010, and fast forward to today, they're near 2 million. So if you bought it a short while ago, 2020, you're not throwing the keys back to the bank most likely if you've got a 3% interest rate, and you could chase the price all the way down to a million and still not lose money if you bought it at that number in the 900s and now need to sell it for liquidity for other purposes. You're still not throwing the keys back at the bank. But yeah, the market can move quickly as people compete against each other, knowing that they only have a million in the property. Sure, they want to sell it for two. They can start competing against each other really quickly, saying, "Well, I mean, I'd be happy with much less than that, because I purchased it much lower than that." Another thing is, people that I talk to on a daily basis often aren't, I feel like, putting a big enough piece of the equation on inflation. Inflation's been very high. If your bank's willing to pay you 5.5% on a money market CD or some product like that, then inflation's way above that. People are forgetting that prices aren't going all the way back down. A lot of people we talk to on a daily basis think they're going to time the market and get a different price. Well, your dollar doesn't have the buying power it once had because of this inflation. Real estate's often a hedge against inflation, so it will hopefully track with it, and can be looked at it that way. Also, if you're looking for a quick flip in real estate, might not advise against that right now. I mean, I might not advise that right now, but if you want it for a long hold, that's much different. The people who we're selling houses to and the people making decisions to buy right now are the people who is become the right time in their life, in their family's lives, and they've got the time, they've got the money, and the time's up. We're never getting today back. Let's come in town, buy the beach home. But the quick flip, probably not a good idea. But the long hold, it doesn't really matter if we dip a little, because I know you wish you could buy 1990s prices, or even 2000 prices, or 2010 prices, or 2020 prices. Nature of real estate is it tracks up, even though it is cyclical. Um, so, these are just a couple talking points. Again, not just regurgitating data on how many homes are selling, or what prices are doing or what. We've got here locally a healthy market still, um, with still lower inventory than we had in, say, 2016, 17, 18. But our negotiations are behaving very closely to that time period, because we seem to be at an equilibrium near that, where we're getting to negotiate about 5% on these homes right now. And it's not like it was 2 years ago when it was just a crazy runoff where every home had 5 offers on it and we were using escalation clauses and writing offers over list. It's a much healthier market now with slow and steady appreciation. And of course, if you're in it for the long haul, if we correct 15-20%, but then we're going back up 6% a year, 3 years you're caught up. Of course, it's not been a crazy investment, but you're not losing money. Any investment that's the nature of it, is it can lose money or it can gain money, hopefully. But the people who we're selling houses to right now are typically buying it for the priceless memories and know that they're going to hold it for the long haul. You do get that rental income. You get to not have the sunk costs of renting someone else's place, and you've got those positives. You're returning to your own home, and hopefully the home does appreciate, as real estate does do. So there's a lot of good reasons to buy. There's a lot of uncertainty in the market and a lot of opinions right now, but I just wanted to talk about a couple things that we're seeing, or thoughts, or as we brainstorm, talk to people, sell houses, what we see on a daily basis. And that is, our market is moving along at a pretty healthy average rate right now here locally. But if you have any questions or you want to talk in detail about this stuff, feel free to give me a call, or the agent that you're working with on the team, and we'd love to talk to you. It's what we do all day, every day. So simply remember j30a.com to return to your home search, and we look forward to speaking, showing, and getting you in place.